And we are live. Good morning, good afternoon, good evening. Just depends on where you are in the world and when you are watching. Welcome, welcome, welcome to Lyonsview Realty Financial Fridays. My name is Clara Lyons-DeVaughn, and I am the broker owner of Lyonsview Realty. We provide residential, commercial for small businesses and nonprofits, and property management services. We also have resources for real estate pre-licensing, continuing education classes, homebuyer financing, down payment and closing cost assistance, homeowner distressed housing solutions, and health, wealth, education, and coaching. Quite a bit going on. But I would just want to thank you for tuning in to Lyonsview Realty Financial Fridays broadcast. You can subscribe to the Facebook or the YouTube channel, and please like and share this broadcast with others. It's a lot of great information that we're going to be providing to you today. And if you want to get connected with anyone on my team or with our speaker, please put your information in the chat, or we'll put our information in the chat. You can reach out to us at bit.ly Lionsview Lifestyle. That's on the screen. As you know, Lyonsview Realty is committed to ensuring you have the resources, the information, and tips to assist you in making the best financial decisions. We want to increase your wealth building power now and in the future. So we're really here to help you stay current on those trends that impact your bottom line. I want to thank you for tuning in. Today, we have a great, great presenter, Mr. I'm going to get this right.
Emenyo
Emenyo. Thank you, Mr. Emenyo
Segbefia.
Segbefia. Emenyo Segbefia. Yes, yes, yes. And he's going to be providing some really wonderful information on down payment assistance for your next real estate transaction. So if you haven't already, share this with your friends because you don't want to miss the information that he's going to be sharing with us today. So without further ado, can you give us a little information about yourself and about your company?
Yes, my name is Emenyo. I've been working with Chenoa Fund for a few years now. We provide down payment assistance through a partnership with a Native American tribe. We were able to provide down payment assistance nationwide, with the exception of New York and the United States territories. We provide down payment assistance anywhere from 3.5% to 5%. We have forgivable options and we have repayable options. As far as myself, I live in Utah, Salt Lake City. I moved from New York to Utah. It was a long journey. Was going through medical school, then ended up in mortgages. So now here I am trying to help people find the American dream of purchasing a home and building wealth through real estate.
Awesome, awesome. That's a big trek, New York to Utah.
Yes.
Yeah, well, they're both cold in the winter, so I guess that's something that have in common. In medical school to mortgages,
Yes.
that's a major switch as well. But they both are fields that help people, get better. So,
Correct.
so
Correct.
yeah,
I just want to be in the business of helping people however I could.
indeed, indeed. So, we've had it's financial. I believe April is financial literacy month, and we've had different people on talking about financial assistance in different areas of their financial path, right? And
Yes.
down payment assistance for housing is something that is so important because it's a barrier for a lot of people, being able to save enough money to get into purchasing a property. So
Correct.
I'm really excited about the information that you're going to share today.
Yes, I'm excited too because one of the things you know that's happening in the world today is most people try to save for that 20%, and it's great if you can do it, more power to you. But if you cannot and you keep trying to save for the 20%, what typically happens is once you save up and you get that 20%, housing prices have risen. The market has moved from where your initial um, starting point was to another starting point. So now you have to make up that gap if you can't save for the 20% fast enough. And another misconception is you need 20% to be able to purchase a home. That's what my train of thought was before I started working here at CBC Chenoa Fund. Then I realized, oh, you need the minimum down for FHA loans is 3.5% of the purchase price with the appraisal, and then the minimum that you need for conventional could be either 3% or 5%, depending on what you're doing. So that was a big misconception there. That takes it down at least 16.5% that you don't need to come up with to be able to purchase a home.
That's a really important point, because there is still the misconception with a lot of people that they do need 20% to get into property. And as you said, 3.5%, 3% for down payment is achievable. And there's also funds that are available to assist people with that initial down payment.
Correct.
Mhm.
Yeah. And then when you're purchasing a home, I didn't even know this was a thing, but closing costs comes into effect because, your lender has to process that loan, and, they have to pay the underwriters and the processors to make sure that loan gets through and everything is done correctly. So now you have something called closing costs that if you're saving for just a down payment, and then you go in there and you find that you need a closing cost also, that can help reduce your down payment and sometimes kick you out of the home. So this is why Chenoa Fund is here, is to help people, bridge that gap and, take full ownership of their home, and then building a family, and also building that equity in the home so that, later on they can have something to stand on and pass on to their kids.
Mm-hmm. Indeed. And you said something else that's really important. I call it stair steps, right?
Yeah.
So stair steps are, get in where you can fit in now, because what you can afford now, as time passes, it goes up. It's like
Correct.
walking upstairs versus walking downstairs. And it's the same property, same condition of property. Property appreciates. It's probably one of the most effective ways to build wealth in America. And it's the way about 89% of Americans build wealth. They're able to leverage what they own now and be able to keep up as, prices are going up. They can sell that home, which is now appreciated, and get into the next property and not be on the ground level, which is a big jump.
Yes. And it's a great way to do that, because you have all these equity. Some things that, that's affecting the community is gentrification. Your mortgage is a fixed rate for 30 years. It doesn't change unless you refinance or you sell the home and purchase a new home. But you're in a fixed rate. You control whatever is happening to that home. So you're always going to be there. You always know what's going to happen with the home. That, to me, it gives you a big peace of mind, knowing that your rent is not going to go up at the turn of a dime just because somebody wants to increase your rent.
Right. Or they can't kick you out either.
Correct.
The bank can kick you out if you don't make your payments, but that's on you.
Anybody will kick you out if you're not making your payments. So at this point, it falls on you and your family instead of, hurting somebody else's investment and yourself too in the process.
Indeed. So what does Chenoa Fund have going on to assist people in purchasing property? What types of products? So I guess, are you a lender, or are you going to get into that?
So what Chenoa Fund has going on is a series of programs that we offer for your for home buyers looking to purchase a home. Please. Excuse me?
Go back one screen, please. I'm just going to put you up now.
Okay.
All right. We're good.
Okay. So Chenoa Fund has a series of programs going on. We have 3 FHA programs and 2 conventional programs. We offer a 3.5% for the FHA minimum, and also 3.5% for the conventional minimum. And then also there's a 5% option on FHA only for the time being. With that, you can use a minimum of 3.5% down for your down payment, and then 1.5% going towards your closing costs. Yes, closing costs can be quite expensive sometimes, depending on the lender you're working with. Each lender is different. So Chenoa Fund comes in and says, hey, we'll help you out with your down payment. You would have to pay it back over a certain period of time. Or if you do A, B, and C, then it'll be forgiven after this amount of time. So that's what we'll get into here, so that you can see what we do offer and how we try to help people get into a home. Chenoa Fund.
I was saying that's pretty awesome. But 3.5%, 5%, more money, more money, more money. I love it.
Yes, and this money can help you. I know a lot of people can afford the monthly payments, but just can't save for the down payment, depending on what city you're in. So this helps you with being able to get into a home. I saw a meme, I think a couple months back, where it says the mortgage company says, I can't afford my $750. It was a weird number where I think it was $900 for mortgage, but I'm paying $1,200 in rent. So I guess it beats me, which is crazy, because most people can afford the monthly mortgage payments, just they can't save to be able to get into a home. Or it could be something else with your file that they're looking at to say they need to mitigate risk. So that's something here that Chenoa Fund we look at and take serious, is trying to help credit-worthy buyers. If you fit into the criteria, we'll be able to assist you. So as we go through this, I will talk about the different products. Big thing for you, especially when you're working with your realtors, is to let them know that all the underwriting is done in-house with the lender. Your realtors will know what that means, especially for you home buyers. Right now, it's a big thing to be able to process your loan quickly and fast. That's what Chenoa Fund prides ourselves on, is being able to be efficient. Efficiency is key, especially in this market, because now you're in areas where it's a bidding war. What a bidding war is, somebody comes in and outbids you for a home. Now they're going, instead of offering the regular appraisal or the sales price of the home, now you're going up to you're going $2,000 to $5,000 above the sales price, depending on where you're in the country. Chenoa Fund comes in and helps you out with the appraisal or the sales price, whichever is lower. In this market, typically the appraisal is lower, so we'll give you the 3.5% or 5% based on that. So what you can do is, if you do have some money saved up and you're trying to get into a home and you find yourself in a bidding war, you can use some of your money to be able to offset whatever you have to go above the appraisal or the appraisal amount. Our products offer.
You glossed over that. Say that one more time, because I don't think people get that. In a bidding war situation, let's say you only have $5. I'm just going to use baby terms.
Okay.
You have $5, and instead of using that $5 for your down payment, now you have someone who's assisting you with your down payment, so you can use that $5 to up your purchase price, either above the appraised amount, or to spend it towards something else. That's huge. That's a huge strategy.
Yes, it's a huge strategy, and it helps your loan looks more attractive, especially in a bidding war, because now you're going above asking price and you're able to get into the home of your dreams. So it's a good strategy right now, especially in this market, to make sure that you're being aggressive and you're trying to purchase a home. And also making sure that you're making the right decision for your family while you're doing all of that, because we don't want you to be in a situation where it's not beneficial to you or your family either. And then products that we offer, some of our products offer no income limits. We do have some high income earners or people that just got married, so it pushes their income above the income limits. That's a great program for you to be able to say, okay, I still have somebody who has my back to be able to get into a home. Then we have a repayable option and we have non-repayable options. The non-repayable options are forgivable options. And with those, it can either be forgiven with 36 consecutive on-time payments, which is basically staying in the home for 3 years, making on-time payments each month consecutively, and then your second mortgage will be forgiven. Or there's a 10-year option, which gives you a higher down payment assistance. So as a borrower, what borrower are you? Where do you fall into this whole piece of the puzzle? How can we help you? So Chenoa Fund requires zero borrower investment. And what that means is certain down payment assistance requires you to come up with 1.5% or 1% or whatever the case may be. They want you to have skin in the game. Chenoa Fund does not require that. But although if you do have some skin in the game, it makes your loan look more attractive, especially in this market. Then you have the FICO score limits. Minimum FICO score is 620. We go as low as 620 for our forgivable programs. Our non-repayable programs, we'll get into that on the FICO score. Then you have income limits. Our DPA Edge repayable second, and the conventional standard 97 have no income limits. So what that means is if you make, like, let's say 100K, but you're in a state or a county that your rent is high and you can't save for that down payment, there's still something out there for you to be able to qualify for a home. So just look for that, and then try to ask your lenders or people that you're working with, hey, is there a program out there for me, because I don't fit into the typical housing finance agencies or typical programs because of my income. Then there's another thing with Chenoa that's a big benefit, and let me emphasize big. It's a qualifying income. So let's say you're in a household, and you have people in the household over 18. Whoever's on the application, that's whose income we'll use to qualify for the program. So that doesn't mean, that means if, like, let's say you're helping out your mom's staying with you or whatever the case may be, and she's going to be moving into the home with you, her income does not factor into your income as the applicant. So this is a great benefit as far as I'm concerned, because it's qualifying income. Then you have first-time home buyer requirement. You don't have to be a first-time home buyer. So whether you own a current home right now or you're looking to purchase a new home, you just got out of a home, you went to stay with your parents so you can save up, and then now you're purchasing a better home, whatever the case may be, you do not have to be a first-time home buyer. Forgivable options comes with a 3.5% or 5% option. And then we'll get into that, and we'll touch into those products here shortly. And all of our products, not all, the products that have the 5% option is our Rate Advantage and then the DPA Edge Soft Second. Those two products are our flagship programs, and most buyers fit into that criteria. You do have other fallbacks just in case those programs do not work for you. We can still assist you as far as Chenoa Fund is concerned.
So I just want to clarify something right quick. So you said if there's another person in the property, and say a mother or another adult,
or a spouse,
so you do or you don't count their income for qualification in that one program?
We don't count their income for qualification on any of the programs. So if it's a spouse that's in the home and the spouse doesn't want to be on the loan or whatever the case may be, it will push them out of qualifying. They don't have to be on the loan. Whoever's on the 1003, as far as industry people that are listening, whoever's on application, that's whose income we'll use.
Okay, got it. Thank you.
Mm-hmm. So example of calculating your income. Not income, your down payment. So this is just at a 3.5% option. So you're looking at the listed price is $300,000. The appraised value is $295. Purchase price is $280. So because Chenoa Fund will lend either the lesser of either the appraised value or the purchase price, in this situation, in this scenario, it'll be the purchase price. So we'll give you 3.5% of that 280, and then that down payment assistance will be $9,800 on the back end. On the second mortgage.
Got it. Nice.
Yeah. Calculating the income. I won't touch into this here because I assume there's a lot of home buyers here. One thing I will say is you can go on to huduser.gov to be able to find out the income limits. And with that income limits, your lender will go through that for you and let you know where you fit in and what borrower you can use. I would say the first person you should get with is Clara, so that she can help you get connected with a lender, and they can work in tandem to make sure they get you to the finish line. So we'll skip over this part here. This is a sample of Maricopa County in Arizona. We'll skip over this part, and then Just make sure that we get the updated information for your county and what state you're in to be able to help you out. Qualifying, as far as the borrower, how do you qualify for Chenoa Fund? How can I do a quick check to see if I qualify? I would say, and Credit Karma is not always accurate, or you can even check with banks now. Your banks give you your credit score. So you can check with your banks and see, okay, what's my credit score? Is it at least 620? Most people have an idea of what their credit score is. So you know that if it's at least 620, the first step is checked. Your debt to income ratio, you're not going to know that. There's simple calculations that you can find online to be able to find out what your debt to income ratio is. Just Google debt to income ratio calculator and you'll be able to do it. Find out what your debt to income is. If it's below 50%, that is awesome. You're in great shape. If you're above 50%, you're still in great shape, but we can look at what we can do to help you out as far as your debt to income ratio. Then your borrower income. That's when you refer back to your lender, and that's when you refer back to Clara, because they can help you figure out what your income is, because they have to see what they'll put on the application to be able to help you out. But just know that if you make, let's say, whether you make $50,000 or you make $250,000, there is an option out there for you with Chenoa Fund. So let's talk about the Rate Advantage program. The Rate Advantage program offers 3.5% or 5%, depending on what you want to pick as the buyer. Your minimum FICO score for that program is 640. Your income, your qualifying income has to be 135% or less than the area in the county that you're planning on moving to. Your debt to income ratio cannot exceed 50% if you plan on using this program. This program is cut and dry and is straightforward. The biggest benefit for you in this program, as the name suggests, is in the rate. This program gives you the lowest rate that Chenoa Fund can offer, as far as you get in 3.5% or 5%. If you have higher credit scores and you're looking for the best rate, this is the best program for you. Although you do get a lower rate on the first mortgage, you do have to pay back the second mortgage. The second mortgage is paid back over 10 years at 6% interest rate. You can look into getting a credit card to get your down payment, but you won't find rates lower than that with a credit card.
Indeed.
Then you have the DPA Edge Soft Second. This program is very, very popular. A lot of people like this program, and I can see why. It is the forgivable program. This program is forgiven depending on which assistance you pick. As the buyer, you have the power to be able to say, I want 3.5% or I want 5%. If you want 5% or you want 3.5%, you'll be able to get that depending on if it all fits and works with your debt to income ratios and everything else. So let's talk about how it's forgiven. The 3.5% is forgiven after you make 36 consecutive on-time payments to your first mortgage. There's no payment required on the second mortgage, and it's a 30-year term on the second mortgage. That is a silent second. That 30-year term, what you're looking at with this program is that 36 consecutive on-time payments. You just have to make that, and then the second mortgage is forgiven. But so what happens?
About 36 payments were basically, what is that, 3 years?
3 years, correct.
Got it. Okay.
So what happens if you're late within the first 3 years? What we consider late, and this is Chenoa Fund, this is not FHA. FHA still considers you late after 15 days. Let's just be clear about that. But Chenoa Fund doesn't consider you late until you're 30 days or more late on the 3.5%. Once we consider you late, then it'll reset, and then you would have to start again and make those 36 consecutive on-time payments. Remember, it's consecutive, so you have to make them all in a row. You can't be late 1 month and then 1 month, 5 months you're early. It has to be consecutive. But if you go 30 years and then you don't make the 36 on-time payments, then you can ask for it to be forgiven at that point. But the only thing that you can't do is that if you're not consecutive, you haven't completed the 36 on-time payments, and you're trying to refinance or sell the home, it won't be forgiven at that point. You would have to repay back whatever you borrowed. So with our example earlier, if you borrowed 9,800, you just have to pay back 9,800 when you refinance or sell the home.
Got you. So that repayment, it's only if you didn't do the consecutive payments, correct?
Correct. And you try to refinance or sell the home.
Gotcha. Gotcha. So, and then the other thing for people, you really should just set your mortgage up for automatic payment. When you get paid, whatever, put that money in a separate account and have your mortgage payment go like clockwork to pay
Yeah.
mortgage each month. And then you don't have that problem. In fact, you could pay it a few days early just to make sure it posts on time.
Yeah. I just pay mine a week early. I know everybody's, a little bit different. I pay mine a week early just to know that, hey, look, at least by the first, I'm not having to worry about, hey, where's the mortgage payment or anything like that. Automatic payments is the best way to make sure that it's coming out, you're doing what you're supposed to do, and have it forgiven.
Right. And so then you get the best rate. Oh no, that's the other one.
Yeah. So that you can have it forgiven within 3 years on the 3.5%.
Mm-hmm. Okay. Gotcha.
Then you have another option of the 5%. That 5% is forgiven after 10 years, which is 120 consecutive months. That 120 consecutive months of on-time payments. We're more lenient on that as far as what we consider late. So you can't be more than 60 or more days late on that program. If you're 60 or more days late, you're considered late in our eyes, and then you would have to pay back whatever you borrowed after the 10 years is up. So make sure that on the 5%, if you do plan on using that program, you're not 60 or more days late. So, and let's be clear, that is what Chenoa sees. But FHA will still consider you late after 15 days. So make sure that you're making those payments on time. You have a 15-day window within the first, let's say, 2 weeks in the month to be able to make your payments. Most of the servicers out there now have apps. And in the apps, everybody has their phones on them. So you can see your bank account and you can see your mortgage statement, your mortgage note. You can make those payments right there. Set it up for automatic payments. It's a great way to avoid making late payments. Now, for this program, for you to qualify, you need a minimum of 620 FICO score. Your qualifying income, remember, qualifying income has to be equal to or less than 115% of the area median income. I won't get into the DTI because that your lender and Clara can explain that to you better at a later time. Just know you need a 620 FICO score. Send in your applications and see what you can qualify for. DTI basically, in a nutshell, helps you find out how much home you can afford, whether you can afford a $100,000 home or you can afford $1 million home. That's basically what the DTI can help you with.
That's pretty good, because 620 for a loan in this market is really a great option.
Correct.
But keep that in mind as well.
DPA Edge repayable second. The repayable, this program has no income limits. Same guidelines, 620 minimum FICO score, no income limits, which is great. It doesn't matter how much you make, you'll still be able to use down payment assistance. But you have to pay it back depending on what you pick as a buyer. Most buyers that use this program pick the 10-year term at 0% interest rate. Just want to get it done and over with as soon as possible. Or you have the option of the 30-year 5% interest rate. And any of the second mortgages that you have to repay back, you can pay it off at any time. There's no prepayment penalties if you don't want to go through the full 30 years or the full 10 years. But this program is for people that have high income and a low FICO. So let's say you graduated, you became a doctor, and now you're going to be making some money, but on paper, it looks like you have the money, but you still have all the student loans and you're just trying to get your feet under you. This is a great program for you. Then you have the conventional options. You have conventional home ready. And then with this home ready, you get the 3.5%. That 3.5%, you can use half of it towards your back into your down payment, or half of it towards your closing costs. So you can just do 3% for your down payment, 0.5% towards your closing costs. Minimum FICO score on this one is 640. The income limits on this follows Fannie Mae's home ready guidelines. So that's what we have to follow that. It's a Fannie Mae product. Then your first mortgage is a 30-year fixed. And I apologize for not saying this at first. All of your first mortgages with Chenoa Funds are 30-year fixed. That is great because it's not going to have a balloon or AM or anything like that. You know this is what you're going to be paying for 30 years. Excuse me, sorry about that. And then your second mortgage is a 10-year term, 2% higher than the first. So whatever the first is, just add 2% to that, and that's what you'll be paying over 10 years. A first-time home buyer is not required on this program, but Fannie Mae does require you to take a first-time home buyer education class. They have a free one, which is offered through Fannie Mae Frameworks. That's a good program for you to be able to use. Then you have the Standard 97. Standard 97, this is the one with no income limits. Same type of down payment assistance. You get 3.5%, where you can use 0.5% towards your closing costs, or roll that back into your down payment. Minimum FICO score is 640. Second mortgage is 10-year terms, 2% higher than the first. And on this program, the Standard 97, it does have a first-time home buyer requirement. That's a Fannie Mae thing. So make sure that and what that means is a first-time home buyer is somebody that's never purchased a home before or hasn't purchased a home in 3 years. So within the last 3 years, let me say that. So make sure that if you fall into one of those categories, this is what you would have to do. And first-time home buyer education is required as a Fannie Mae guideline if your loan to value is 97% or higher. So if your loan to value is 90% or higher, you have to take the home buyer education course. So comparison. Let's do a quick comparison on rates on the first mortgage for you. If you're going with the forgivable second, all right, and this is at 3.5% on a $200,000 price. That 3.5%, you're looking at. Sorry, my mouse is a little sensitive here. At 3.5%, you're looking at, let's say, $894 for your first mortgage payment on a $200,000 home. This does not include any mortgage insurance, any PMI, or anything else. This is just the mortgage. So this is what your mortgage will be. The second mortgage, since it's forgiven, has is zero. All you have to do is complete the terms, and you'll be able to have that forgiven in 3 years or in 10 years, depending on which one you pick. But this one will be the 3-year option as long as you make those consecutive on-time payments. Then you have the rate advantage. Rate advantage, that is, let's say the rates were equal in this situation. The rates for today is a little bit different. But the point I was trying to make here is now you have a lower payment on the first, but you have a second mortgage payment, which is about $85 a month for $7,000. That's still lower than most credit card payments, and you're making that the total is $925.
So go back for a minute. On the DPA Edge program, the payment, I can't see that. So the payment is how much total?
$894.
And on the rate advantage, it's $925.
25.
So it's a little bit more, but it's still a good.
It's still a good program because your rate is lower on the first.
Right. So you're paying down principal actually faster, and that's on a $200,000 payment. So, guys, this doesn't include your taxes and insurance, but on your base.
On your base mortgage, correct?
Yeah, base mortgage. That's great. It's still a great rate. Okay.
And the last thing we have here is FAQs, quick FAQs. And then I'll open this up to you guys so that we can answer any questions that have come in the chat. But I'll just leave this portion up, and then Clara, let me know if there's any questions in the chat.
Okay, I'm not seeing any questions at the moment, but if you do have questions, put them in the comment section and we'll get to them. But you want to roll through this list quickly?
Sure. So, so if you have a verification of housing expense, that's what a VOR stands for. So that means you're verifying if you're paying rent or whatever your mortgage is. The owners have to fill it out. So whoever you're renting from will have to fill out that VOR for you. And then if you don't have a housing expense, you need what is called a rent-free letter. And that rent-free letter has to be filled out by the homeowner or the landlord, whoever you're renting from, or whoever you're living with rent-free. There's something called mortgage credit certificates. And with those, we do accept them as an income credit. Although we do not provide them, you can get them from your local state housing agencies and then use that. Then you have manual underwrites. Manual underwrites are acceptable with the forgivable or the no income limit option. So make sure that if your lender says you have to do a manual underwrite, you understand what that is. You can even do a quick Google search to understand what a manual underwrite is. Gift funds cannot be used for reserves. So if you have to, if you're in a situation where you need to have a reserve, gift funds are not accepted. You have to be able to show that you can come up with that money for your reserves. 30-year fixed first mortgage rate. So like I said, it's fixed on all the first mortgages. There's no adjustable rate mortgage. That we don't do any of those. Then you have qualifying income. So whoever's on the application, that's whose income we'll use to determine if they're above or below the income limit. Then you can do a 2-unit property on the DPA edge. So that is your forgivable or no income limit option. So you can use DPA edge for that. And then while we're on that topic, property types that we do accept. We accept townhomes, condos, modular, detached, manufactured homes are accepted too. We accept standard single-family residence or 2-unit properties.
So
we do
pause on that. You were saying you accept modular manufactured homes. That's pretty big because most people have to get a personal loan for modular or manufactured housing. And I actually have a client now who was having that issue because traditional lenders don't lend on those properties. So that's good to know.
Yes. And then with those properties, because of the nature of them, there's additional guidelines, especially on the manufactured homes. So make sure that if you're doing any of those, that your lender is aware that there's extra guidelines and they would have to take a look at it. They can find it online at chenoafund.org.
Gotcha.
And then the properties that we do not accept are 3-unit properties or more. Anything like that we do not accept. And then also we do not accept mobile homes. Those are not accepted either. And then no home buyer education above 640 for FHA, but for a conventional, depending on your situation, you may have to take home buyer education. Let me just set you up with the expectation. For conventional, you have to take home buyer education unless otherwise. And then you do not have to be a first-time home buyer on any of the FHA products or the Home Ready. The only one that you do have to be a first-time home buyer on is the Standard 97. So let's say you're DACA recipients. We do accept DACA recipients on our FHA programs.
What's DACA?
DACA, and thank you for putting it on the spot, but DACA recipients are, let's say, the most common example is you've lived there your whole life, but you haven't had any, you don't have green cards, or you don't have a green card, but you've been paying taxes. In that situation, we will accept you as far as a DACA recipient. And that's a very loose explanation of what a DACA recipient is. If you do a quick Google search again, you'll be able to find out what a DACA recipient is. And it's up to the mortgage provider, the lender, to prove that you're a legal resident. And as long as they can prove that, we will accept you. And then for your income, overtime, or anything like that, we just follow FHA guidelines or Fannie Mae guidelines. We do not have any additional overlays.
Gotcha. So this was a lot of information, but I guess if I could summarize it, Chenoa Fund is not the lender, but you work with lenders. That's
Yeah.
that's number one. If you need a list of the lenders, reach out to myself or to. I'm gonna get this. I'm scared to say your name because I don't want to mess it up.
Emenyo.
Emenyo.
Yeah.
You can reach out to Emenyo for that list, or you can reach out to anyone on our team to know the list of lenders who can do the Chenoa Fund. Two, you can get 3%, 3.5%, or 5% in down payment assistance. And there are basically 4 or 5 different types of products that you can replay this so you can get all of that information of what the requirements are for each of those different types of products. If I understand correctly, some of that money can be on one of them can be used for down payment, and the balance of it can be used towards your closing costs.
That is correct.
Over the 3%, the balance can go towards your closing costs, up to the 5% or up to the 3.5%. And there is how they do this is through a soft second or a hard second. And what makes it soft or hard is if you make your payments on time, there's no payment depending on the program that you're doing for that second, and it goes away. So it doesn't really cost you anything. If you don't make your payments on time, then you're going to have to either reset your clock and stay in the property longer if you're in the property. But if you plan to resell that property, you're going to have to pay that money back.
Let me just clarify what makes it a soft second or one that you have to make payments on. It depends on the program you pick.
Okay.
So you can pick between either one. It just depends on everybody's situations. Most people just pick the soft second because they want to have it forgiven. And most people think about refinancing later to see if the rates, God forbid, another pandemic happens. But if another pandemic happens and the rates go lower again, then hey, you can refinance at that point once you've completed the terms of those.
Gotcha. So you can actually choose if you want the forgivable option, which is the soft, or the non-forgivable option, which is the hard. But even with the hard, what you're paying is very minimal for that second, and you still have a very affordable mortgage payment moving forward. So, and you don't have to be a first-time home buyer. 2 units or less, so duplexes to single families to condos, townhouses, and manufactured and modular homes, which is big because a lot of lenders do not do those. You have to get personal loans typically for that type of housing product. So really, really, really great program, really, really great funding option if you are looking to for another possibility to assist you with funds that you might need for your next property purchase. So did I summarize that pretty?
Yes, you did. Yes, you did. That was perfect.
Awesome. So great program. Definitely reach out to us. I just want to thank everybody. I want to thank you because that was a great presentation. Really, really great information. Financial Fridays is here to provide people with resources, information, tips, and tools. And this is definitely a resource that I think will help people move forward in their search for a new property. So I'm really glad for those of you who tuned in today. Feel free to like and share this video with someone else so that they can get the information. If you think of a question later, just put it in the comment section and we will definitely get back to here. Our guests are always a resource to you. So how do people contact you?
So you can contact me. My email is my first name last name at chenoafund.org. You can contact me anytime if you have any questions, and we'll be more than happy to help you out.
Awesome. So I want to thank everybody for watching today. As always, send love and light and prayers out to anyone who's lost a loved one in this time of pandemic. We're out and about more things are opening up, which is awesome. But please be safe. If you've got anyone who's in the hospital and you still can't see them for whatever reason, love and light to you. and always to our essential employees, our healthcare providers, our transportation, food police, and especially our leadership. We want to encourage everyone to take care of yourself, take care of your family, and stay safe. My name is Clara Lyons-DeVaughn. Financial Fridays streams on Facebook and YouTube Fridays at 9:30 Eastern Standard Time, so you can join us again. Until then, keep living your best life. Thank you, Emenyo.
Thank you. Have a good day, guys. Thanks for having me.